think there's a positive story to report when we're talking about the MENA market specifically and drawing a comparison to the global level of confidence. And our Capital Confidence Barometer that we've launched today actually cited some very positive statistics whereby 74% of respondents, which is an uptake over the last year and 6 months, stating that they had confidence in the local economy improving. That was 74% at the local level. Compared to global, this was 61%. So we definitely see a disparity between MENA confidence and global. Additionally, job creation is always a good indicator of the markets turning around. And as we're starting to come up into a kind of uptick out of the recession, especially in the UAE and Saudi Arabia, we're noticing that 54% of our respondents stated that they actually wanted to increase their workforces and hire more talent over the next 12 months. So the fact that companies are hiring again really does show a very positive message to both the private and public sector too. Another comment just to briefly add to that would be a macro level. I think stability in oil prices staying high definitely means that government, sovereign wealth funds have definitely got more of a bullish nature about their budgets and capital expenditure programs. That plus the capital markets performing strongly, especially the likes of Dubai Financial Market and the Saudi Stock Exchange, means that I think the confidence statistics are proven and the outlook looks good, with the backdrop of a little bit of instability, but overall going in the right direction. Deal closures have always been a key challenge, especially in this market, primarily driven by A, quality of deals, and B, valuation gap. So what we've always seen is a big disparity between, buyer and seller coming to common terms. And again, coming back to our Capital Confidence Barometer that launched today, MENA respondents, 41%, which is a very big sample, stated that they perceive the valuation gap to be 10% or zero, which is very healthy. So when we look at existing pipelines being relatively stagnant, some of those could see closures in the short term if that valuation gap is realised with existing mandates that are being run in the markets here. In addition to that, I think the fact that 75% of respondents stated they think deal volumes will improve is another healthy statistic. Additionally, what we are seeing as a critical challenge to the return to the capital markets and M&A deal closures is primarily the fight for talent. So retention of existing teams and skilled personnel, but also growing those teams and building them out. As per the previous comment that I made about companies recruiting heavily, and that's what our executive respondent said, that needs to follow through in terms of being able to build upon those teams and realise transaction execution. And without meeting that quota, it will be difficult for them to implement.